or lower in the first half, then we can start looking for trade opportunities based on whether if the price are pushing into a premium to short at this lens level. If this doesn't happen and markets does open gap down, and if we start seeing a lot of selling pressure in the first half hour, then we're going to be cautious. We're not going to chase the markets until we find a good opportunity to aggressively short the markets. Hi, Nifty has been correcting for the past 3 days, and every day we are seeing a lot of selling pressure during the intraday price moves. Here are 4 things that you need to keep in mind. Weekly and monthly price levels. We have two trigger price levels on the weekly and monthly charts, which are indicating a weakness in the chart, in weakness in the price. Two, the current IVP for Nifty is at 94, which is extremely high, and it shows a lot of uncertainty in the price move. But these IVPs usually change, and it swings from a higher IVP to a lower IVP. And since we have an RBI rate cut coming in tomorrow, that is the 9th of October, the IVP could start cooling off from 94 back around to 34, 35 odd levels. The fourth point that we have to keep in mind is the daily open for tomorrow. Based on how markets open with a gap up or a gap down or a flat opening, we have certain different price moves that we can expect. So we're currently looking at the monthly time frame, and if you notice around the 21,800 odd levels, we have a very significant point of interest which has created a weak low on the price. If you notice, for the past 2 years, the markets have been continuing to push higher and higher while breaking structure to the upside, but we really don't have a significant higher low that the markets have created for the prices to come back to. So this is going to create a scenario where markets are leaving weak lows for the prices to pull back into. But at the same time, momentum can exceed momentum and can keep continuing the same direction as long as there is a lot of aggression in the buyers. The same thing can be seen on the weekly time frame. If you notice on the weekly charts, we have prices creating weak higher lows on the way higher, and we see two higher highs, higher lows formations where both of them have not created any significant higher lows on their way higher. Right, so these two are again going to be part of an internal low that has been created in the entire rally that has started 2 years ago. So both on the weekly and the monthly time frame, we have been aggressively trading higher without creating any significant corrections in the charts. But at the same time, if you notice on the daily time frame, we have created a significant higher low formation at around 24,000 level, and then we have broken structure higher, and we have started to push the prices higher. But from October 1st onwards, we have seen the markets trying to pull back and clear out the internal liquidity pool that was resting below the 24,700 odd levels. So today we saw the prices actually trading below this internal low and then closing just above this. If you also notice, we have 3 points of interest that the markets have created while pushing higher, which we call the lens, where there's a lot of liquidity that has been untapped into, right? Out of the 3 lens points, number 2 is the current price levels where the markets have respected and bounced out of. So ideally speaking, this could be a healthy price reaction for the markets to find liquidity to start continuing pushing higher. And the other alternative that the markets can see is prices tapping into the point number 3 and slightly trading below the point number 3 and trading back into the 24,250 odd levels. Now, these are the 3 main points of interest that we will be discussing and building our trade ideas on. Now, when it comes to the IVP of the chart, we are currently at 94, and which has been on an increment since October 1st, and this is going to be very, very crucial for the markets to start cooling off in terms of IVP. Always remember, whenever you have IVP that sharply increases before an event, it tends to cool off right after the event, which is going to be announced tomorrow at around 10 a.m. Right, so this is going to help us bring back the markets back into the bullish scenarios, or at least help the markets consolidate for the next few days. Now, another thing that you guys have to keep in mind is we have two important things that are happening tomorrow. One is, of course, the RBI rate cut, right? we are expecting the RBI to have a rate cut in the interest rates. And also at around 11:30 p.m. in the night, we have the FOMC minutes, which is going to be helping us determine how we are going to be trading in the global scenario. So if the markets or the prices tend to bounce off during the closing hours of market hours tomorrow, then there could be a positive sentiment that will be expected from the FOMC meeting, which will help the markets to start recovering and pushing the prices higher. However, if we see in the first half, if the markets do push higher and then start correcting towards the closing, then we could infer that the FOMC meetings are not going to be helpful in terms of the price, and then we could expect further correction on the on the charts. Another thing that you have to keep in mind is on the daily time frame, we have closed with a lot of aggression by the sellers. But again, it really didn't determine how well the prices are going to react tomorrow when it opens with a gap up or a gap down or a flat opening. So let's take a quick look into what happens or what we can expect if the markets do open with certain criterias, right? So the first thing that we have to understand is on the way down lower today, after the markets opened up with a slight gap up, we have created certain price levels which are going to be very crucial for tomorrow's trading. Suppose if the markets do open within this range, right? If the markets open within this price range and then we start seeing the markets pushing higher or lower in the first half, then we can start looking for trade opportunities based on whether if the price are pushing into a premium to short at this lens level, or if the markets decides to start trading lower after a flat opening, we can start looking for opportunities to start aggressively shorting the markets. However, if the prices does open within this range and we start to trade above and trade back below into this range, tomorrow can be a consolidating day for the markets, and it could possibly take a pause for RBI's rate decision that will happen tomorrow. The other two alternative possibilities that we have is one being a gap down below this closing range, and if the markets does open anywhere below this yesterday's closing range, then two things that we have to look out for is in the first 15 minutes, if the markets try to trade higher, we will start shorting the markets again back within this closing range of yesterday's market. We will again start looking for short opportunities once the price trades back into yesterday's closing range. If this doesn't happen and markets does open gap down, and if we start seeing a lot of selling pressure in the first half hour, then we're going to be cautious. We're not going to chase the markets until we find a good opportunity to aggressively short the markets. Another alternative scenario that could happen is, like I said, because of the FOMC meeting, if the markets do correct, if the markets do open with a gap down and do correct aggressively towards a lower price level, depending on how the market structures are creating, we could start looking for an opportunity to long the markets back into this lens level here. Okay, this is one alternative if the markets open gap down. However, if the markets do decide to open with a gap up, right, a gap up, I would significantly consider above this particular price level, that is about 24,820 odd levels. If the markets decide to open anywhere here, either above this or at this range, I again want to see two things happening. The first scenario is the markets starting to correct again. If this happens, we will be starting to look for short opportunities right away. And if the price trades back above the 24,820 levels, then there could be a possibility that the markets will now take the RBI decision and the potential FOMC decision and continue to push higher. If this is the scenario, then this lens point will not be of any significant importance for us. The only condition where we can start shorting if a gap up occurs is if the markets open with a gap up and starts trading higher in the first half hour. If this happens, then again this lens point will be very crucial for us and we can start looking for opportunities to short within this price range. And again, we can start continue to target the prices much more lower, because like I said, on the weekly and on the monthly, we have a lot of weakness that the markets have created in the price chart. So these are the three possibilities that could happen based on whether the markets open flat, open gap up, or open gap down.